Today, we're going to talk about something that may not be the most exciting topic, but it affects every aspect of your financial life, your credit score. Now, I know what you might be thinking. Ugh, credit scores, that's boring. Can't we talk about something more interesting? Trust me, I get it. But the truth is, having a good credit score can mean the difference between being able to buy a house, or a car, or even get a loan for your small business. So, listen up. There are some simple things you can do to boost your creditworthiness and increase your chances of getting approved for loans and credit cards with lower interest rates. In this video, we're going to share a step-by-step guide to help you improve your credit score and take control of your financial future. So, hit that like button, and let's dive in. Why does it matter? Now, I know it's not the most interesting topic out there, but trust me when I say it's one of the most important things to pay attention to when it comes to your finances. Let's start with the basics. Your credit score is a number that measures your ability to manage debt. The higher your score, the more responsible you appear to lenders. And who doesn't want to be seen as responsible, right? So, what does a high credit score get you? Well, the short answer is better to loan terms and easier approval. And let me tell you, a good or excellent credit score can save you hundreds of thousands of dollars over your lifetime. Yes, you heard that right, hundreds of thousands. That's a lot of avocado toast. Think of it this way, if you have excellent credit, banks will be fighting for your business and offering you better rates, fees, and perks. But if you have poor credit, you'll be stuck with fewer options and higher annual percentage rates. And who wants that? Also, it affects your ability to get life insurance. In countries like the US, that's a deal breaker. How do I improve my score? This is exactly what you need to do to improve your score. Review your credit report. It's time to review your credit reports. This is the first step you need to take. Now, before you groan and roll your eyes, hear me out. Taking the time to check your credit history can be a game changer when it comes to boosting your creditworthiness. Think of it like going to the doctor for a checkup. It might not be the most exciting thing in the world, but it can help catch potential problems early on. So, what do you need to do? Simple, pull a copy of your credit report from each of the big 3 credit bureaus, Equifax, Experian, and TransUnion. Then, sit down with a cup of coffee and take a good look at each report. What should you be looking for? Well, good signs include a history of on-time payments, low credit card balances, a mix of different credit accounts, older credit accounts, and minimal inquiries for new credit. On the other hand, if you see late or missed payments, and high credit card balances, you're in credit score trouble. Don't worry if you're not sure what all of this means, you'll learn it later in the video. Handle your bill payments. We all know how stressful it can be to stay on top of them, especially when you have so many bills coming in every month. But did you know that your payment history makes up a whopping 35% of your credit score? That's right, paying your bills on time is crucial to maintaining a good credit score. To avoid late payments, start by creating a filing system to keep track of all your bills. Whether you go old school with paper or modern with digital, having a system in place can save you a lot of hassle. And if you're forgetful like us, setting up due date alerts can be a lifesaver. But here's a pro tip, consider automating your bill payments directly from your bank account. That way, you won't have to worry about remembering to pay your bills every month. And if you're feeling brave, you could even charge your bills to a credit card, assuming you pay it off in full every month, to build a history of on-time payments and boost your credit score. Remember, the key to maintaining a healthy credit score is to pay your bills on time. 30% credit utilization is the sweet spot. It's time to talk about credit utilization. This fancy term refers to the amount of credit you're using compared to your total credit limit. And, as you might have guessed, it has a big impact on your credit score. After payment history, it's the most important factor in determining your score. So, what's the magic number? Aim to keep your credit utilization at 30% or less of your total credit limit. That means if you have a $10,000 limit, you don't want to have a balance of more than $3,000. And if you can, shoot for even lower, like 10% or less. That's the sweet spot for boosting your credit score. To stay on top of your credit utilization, set up high balance alerts on your credit cards. That way, you'll know when you're getting too close to your limit and can stop using your card until you pay it down. Another trick is to ask for a credit limit increase. If you've been a responsible borrower and your income has increased, you might qualify for a higher credit limit. No hard inquiries. Alright, folks, let's talk about credit inquiries, both hard and soft. Soft inquiries won't harm your credit score and typically come from sources like checking your own credit, employers you give permission to, and credit card companies sending pre-approved offers. Now, hard inquiries, on the other hand, can hurt your credit score for up to 2 years. These come from applying for new credit, like a mortgage or auto loan. Banks might think you're in financial trouble if you make too many inquiries in a short period, which can damage your credit score. Fatten the credit file. Do you have a thin credit file? In other words, do you have enough credit history to generate a credit score? Don't worry, you're not alone. Millions of Americans face the same challenge. But, did you know there's a way to beef up your credit file and earn a good credit score? Yes, you heard it right. The answer is Experian Boost. This nifty program collects financial data that isn't typically in your credit reports, such as your banking history and utility payments. It uses this information to calculate your Experian FICO score, and the best part is, it's free to use. This program is perfect for those of you with limited or no credit but has a positive history of paying other bills on time. With Experian Boost, you'll see the results in as little as 3 to 6 months. Consolidate your debts. Let's talk about consolidating your debts. Now, I know it might sound like a lot of work, but trust me, it's worth it. If you have several outstanding debts, it's a good idea to consider taking out a debt consolidation loan from a bank or credit union. By doing this, you can pay off all of your debts and be left with just one payment to worry about. Plus, if you're able to snag a lower interest rate on the loan, you'll be able to pay off your debt much faster. And that's a big win for your credit utilization ratio and your credit score. Another option is to consolidate multiple credit card balances by paying them off with a balance transfer credit card. These cards often have a 0% interest promotional period, which is awesome. But be careful with balance transfer fees, which can add up quickly and cost you between 3% to 5% of the amount you transfer. So, always do the math and make sure it's worth it. Monitor your credit. If you want to stay on top of your credit score and track your progress, credit monitoring services are the way to go. They're like a personal trainer for your finances, keeping you motivated and on track toward your goals. Plus, many of them are free. These services monitor your credit report for changes, like paying off an account or opening a new one. They also give you access to your credit score from one of the major credit bureaus, updated monthly. So, if you're working hard to improve your score, you can easily see if your efforts are paying off. But that's not all. Credit monitoring services can also help prevent identity theft and fraud. That's it for today, folks. I hope you guys got a good idea of how to get your credit score higher and live a better life without paying too much interest. Remember that this takes time and patience, but it's totally worth it in the end. Hit that subscribe button if you haven't already done so, and we'll see you guys next time.